Yesterday we discussed questions based on fixed capital account method. Today we'll discuss guarantee of profit. Let's begin. Guarantee of profit means assurance of minimum amount of profit even when firm incurs loss or insufficient amount of profits. Deficiency so arised will be borne by the guarantor. So, if the profits are sufficient, then in that case, there is no need to invoke the right of getting the minimum amount of profit. So, let's discuss the different types of guarantee. The guarantee of profit by a partner to the another partner, and the second is guarantee of profit by a partner to the firm. Let's discuss in detail the guarantee of profit by partner to another partner. So here let us assume A and B are partners in a firm with equal ratios. A has given guarantee of profits of rupees 60,000 to partner B. Profits earned for the year ending 31st March 2025 are rupees 1 lakh. Show the distribution of profits. So first of all we should see that what is the amount of guarantee, that is 60,000. Who is to bear the guarantee? The deficiency A, right? And the profits are given 1 lakh. Let's prepare the profit and loss appropriation account for the year ended 31st March 2025. So here transferring this profit to profit and loss appropriation account by profit and loss account rupees 1 lakh. Now this profit is to be divided equally between the partners. Equally means in 1:1 ratio. So if it is being divided equally, 1/2 of rupees 1 lakh gives us 50,000 for both the partners. So initially A and B are getting 50,000. But if we compare that B has been given a guarantee of rupees 60,000 by partner A, right? So partner A has given the guarantee of 10,000. It means if B is getting 50,000, there is a deficiency. This amount of deficiency is to be borne by A. So here we are reducing the profit of A by 10,000 and increasing the profit of B by 10,000. So in this case, B will be able to get the minimum guaranteed amount 60,000 and A will be bearing the deficiency. Thus he will get rupees 40,000. So this is how the profits are being distributed between the partner A and B. Let's discuss another example. Here A, B and C are partners with 5:3:2 ratio, where C is given guarantee of profits of rupees 50,000 by A and B. Deficiency, if any, will be borne by A and B equally. So here two partners A and B has given the guarantee, and if there will be any deficiency, A and B equally will be bearing that deficiency. Profits earned for the year ended 31st March 2025 are rupees 1 lakh. Show the distribution of profit. So profits are given, we'll be making profit and loss appropriation account. Let's see. So here we are transferring the profit of rupees 1 lakh by profit and loss account. Now we'll be distributing this profit of rupees 1 lakh between the partners in the ratio 5:3:2. So if we distribute the profit, we find that initially A will get 50,000, B will get 30,000 and C will get 20,000. But if we compare, we will be able to find out the amount of deficiency. This amount of deficiency has been calculated this way. The amount of profit guaranteed to C is rupees 50,000, whereas the profits are distributed in 5:3:2 ratio to C, that gives him 20,000. So the amount of deficiency is 30,000. This 30,000 is to be borne by A and B in equal ratios. So the deficiency, this 30,000 multiplied by 1 by 2, that gives us 15,000. Same for B, 15,000. So the profit of A as well as B will be reduced by 15,000, whereas the profit of C will be increased by 30,000. So here A has got initially 50,000, reducing his profit by 15,000, so he will get 35,000. B initially has got 30,000, but we are reducing his profit by 15,000, so ultimately he will get 15,000. Whereas C, as per the profits, initially needs to get 20,000, but he has been given guarantee of rupees 50,000 minimum. To make this amount 50,000, we have added rupees 30,000. So finally A will get 35,000, B will get 15,000, and C will get the minimum guaranteed amount of profit, that is 50,000. So this is how the profits are being distributed between the partners, and the right of this minimum guaranteed profit is being invoked because there was a deficiency of rupees 30,000. Let's discuss another question. So here A, B and C are partners with 5:3:2 ratio, where C is given guarantee of profit of rupees 40,000 by A and B. Deficiency, if any, will be borne by A and B equally. So profits earned for the year ended 31st March 2025 are rupees 2 lakhs. Show the distribution of profit. So for showing the distribution, we have to prepare profit and loss appropriation account for the year ended 31st March 2025. Transferring the profit here by profit and loss account 2 lakh. So if we distribute the profit between A, B and C in the ratio 5:3:2, see, this is how we are distributing. A gets rupees 1 lakh, B gets rupees 60,000 and C gets rupees 40,000. So if we compare the amount of C with the guaranteed amount, so that comes out to be 40,000, right? So here the amount of guaranteed profit as well as the initial profit he is getting is also 40,000. So both are same. Thus there is no deficiency at all. So the profits are plainly distributed in their 5:3:2 ratio, and C is able to get the minimum amount of profits also. So here there is no need to calculate the deficiency at all. The profits are appropriate. Let's discuss second part, that is guarantee of profit by partner to the firm. So under this condition, a partner assures minimum amount of profit to the firm. That is, the firm will earn some certain amount of profit in any case. So if the firm incurs loss and fails to earn minimum profit guaranteed, then the deficiency will be borne by the partner who has given the guarantee. So let's understand with the help of an example here. A, B and C are partners in a firm with 2:1 ratio. A has given guarantee of profit of rupees 1 lakh to the firm. It means A has given this assurance to the firm that firm will always get minimum 1 lakh. Now profits earned by the firm are rupees 75,000 for the year ended 31st March 2025. Show the distribution of profit. So if we just analyze the question, we find that the minimum amount of guarantee is rupees 1 lakh, whereas the profit earned by the firm is rupees 75,000. So here is a deficiency of 25,000. Right, this deficiency of 25,000 will be borne by A because he has given the guarantee. Now in this type of a question where partner gives the guarantee to the firm, in that case the deficiency amount is borne in terms of the capital account. Right, so here please see how we are distributing the profit by profit and loss account rupees 75,000, and then by A's capital account. First of all, by reducing A's capital, or he is bearing this deficiency, and this 25,000 is being added to the firm's profit, right? So if we see now, the firm's profits are of rupees 1 lakh, right? This is the assured or the minimum guaranteed profit that is being assured by A to the firm. So now if we see that initially firm has earned 75,000, A has borne the deficiency in terms of his capital account 25,000, right? And now the profit becomes rupees 1 lakh. Now this profit will be distributed between these three partners in the ratio 2:1 as given in the question. So if we distribute, that comes 40,000 for A, 40,000 for B, and for C it comes 20,000. So this is how the profit, the minimum guaranteed amount of profit, if given by partner to the firm, then it is to be borne by this way, that the partner's capital account to be credited in this account, right? I hope with this you have understood the concept, and will discuss more questions on guarantee. Please do subscribe and like my channel. Thank you.